And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, June 10th, 2021. The market did picture perfect work today and hit the nail on the head and on several fronts. So as I left it last night, I felt that the S&P needed to put in an additional move lower and to below 4205, 4206, around that area. And we did get that, and it came down to 4207. So it ended up putting in a very small failure, but that's totally acceptable. And that then allowed me to put the labeling on. So I have the beginning, the very first wave up of minute wave 5. So it's a sub wave, and that's signified here. And that's the first wave. And then we had the wave 2 correction, ended beautifully, spiked, ended just what we were looking for. And then the market launched higher. And if you remember what I talked about last night, is that if that was going to be the case and the market intended to move higher, that it needed to do it in a launch type of a atmosphere and basically start to move to that next Fibonacci resistance level at 4,242. And that's exactly what the market did. Got right up there, exceeded it, sold off in stellar fashion. Because if you remember, I said if it gets up to that level, I would expect that it's going to come off. At that time, I was looking for a wave 2 correction. And as it ends up, that's exactly what it was. But again, the third wave, if this is wave 1, 2, the third wave, which is now in, number 1 should be the longest and the strongest, and number 2 is subdividing into its own 5-wave sequence. And that wave was a wave 2. So the launch off of this low was wave 1. The nosebleed drop was wave 2. Now, granted, it was a pretty good sizable move for the S&P. Let's see, that high was 42.49 and the low was 18. So that was a nice drop. 21-point drop, lickety split within an hour. So, and then the market did a more steady climb, just a very steady pullback, but nothing really selling off too hard or as severe as we did this morning. So it is angling up, and I'll just drop this down to the 15-minute right away so we can kind of see some of those internals. So you see this death-defying drop, and tell me if you were long, you were like, oh my God, get me out, but so was somebody else. And so it just kind of piled up, and then when it stopped, they immediately looked one way, looked the other, and they just started buying it and buying it all the way back up. And it was fairly steady. There was a 15-minute sell bar, 15-minute sell bar, but those are just small pullbacks within this ongoing. So now it looks like we may still be subdividing yet again, and that's going to show something that even on this very small level, the Elliott wave building blocks. And if the third wave is always going to be the longest and the strongest, this is how it starts. It runs, it slides, it runs, it comes off, but eventually those buy sides just get steeper. And that's what I'm kind of looking for now. Now, where can we go from here? Well, obviously, we have next resistance, 0.618 resistance at 42.61. Then we have the next Fibonacci resistance, which is 70.5% at 42.75, we're going to call it. And then this will be the cluster, 4,287, 290. So the zone is 42.90 to 42.60 is where we're expecting it to kind of get up into. Doesn't necessarily, eventually, yes, break it, but we're looking for where's this third wave going to take us now. We can put one more layer on there. I'm going to show you how I would do that. I go to today's trade. So I go from, come on. Yeah, I'm going to do this for me. I hope it does it in the right place. Yeah, good. And I'm going to then take it up to that high, bring it back down to that low, and boom. So we got some overlapping, but look at that. So this small third will be equal in length to the first wave, right there. At 0.618, 4,060, 61. That's going to be good news. And then our next overlap is up here at 4270. So that zone is very realistic. And ultimately 1.618, that would be a good calculation for that. And guess what? That's sitting at the 4287. So the zone 4290, 4260, you can see really is in play. And now we've got double confirmation. We've got the larger Fibonacci, and then we have an internal extension to show us what the 3 should look like. Before we were doing for what the whole 5 should look like. So this is good. So, but the market has a lot of proving to do, and it sits in la-la land, so to speak. And although we have a lot going on this week, a lot that the futures are rolling, so we're rolling out of June, we're putting them back now out into September or further. We've got an expiration tomorrow, not the biggest one, but we have an expiration tomorrow, and then the following week we're working towards the a quadruple with futures and options and a few other goodies all expiring on that day. So there's a lot of shifting. So it's position shifting. It doesn't necessarily have to have anything to do with market underlying. It happens because it has to. And so you've got a lot of rotating of positions. And then coming also up, following all of this, is into the end of the month, we have the end of the second quarter. So there's a lot to do there. Plus, we're doing it up at highs, plus. So there's a lot of impetus that's going to push it real quick, but it can come off real quick. We saw some of that today. So stay on your toes. It's going to be very, very advantageous to trade this, because if you can just stay focused and you follow it along with your Fibonacci's that we've just created, and you can do this yourself, and also just using your moving averages. Use your moving averages during the day. They really are very, very helpful, and they help you to put in. And then also for those that use point of control, their value area high, value area low, these are also areas that you check in with. And it helps because a lot of the technical trade and shifting of positions could be lined up around all of these different levels. Next update, Sunday.